Well, it's been a very lively morning, late evening for Blake. But what we've seen is Nvidia coming out with a very strong set of numbers. Certainly the market likes what we've been seeing there. Shortly after that period, we've seen the International Court of Trade in the US looking to block some of Trump's tariffs, saying that they're unjustified, and certainly aligning with some of the Democrat states and also some of the small business decisions. That has put a lot of conjecture into the market. People are trying to understand exactly what this means. And we do need to have some sort of Harvard legal scholar to understand exactly how this turns out. The markets are unsure, but at the moment, bidding up risk, and we're seeing breakouts in the NASDAQ. We're seeing tech stocks flying. The US dollar's finding a bit of a bid, and we're seeing gold rolling over and finding a few buyers in crypto as well. And we'll explore exactly what this means for market. It is dynamic. This is breaking news at the moment, but we explore what this means in the trade-off. Well, g'day. My name's Chris Weston, Head of Research here at Pepperstone, and I'm going to be joined in 2 seconds by Mr. Blake Morrow from Forex Analytics. And we're going to be discussing all the factors that are going on in this very dynamic world of markets, which we're seeing headlines breaking as we speak at the moment, and markets are trying to make sense of what's going on. But we look at the technicals, we look at the moves, the shakers that's going on, and we try and make sense of this crazy world. Mr. Blake Morrow, come into the programme, my good sir. Have you got your Harvard Law Scholar hat on at the moment so we can dissect the breaking news and understand what it actually means for markets going forward?
I'm going to do my best to just try to dissect this. I think as you are as well. The news stream is hitting us fast and furious. And, as we've said here a lot on the trade-off show, you got to keep your head on a swivel, Chris. You've got to keep your head on a swivel. And this
any time of day it can hit you.
It really, just as you're going to start to film the trade-off, things happen.
Yeah, we had to go back, get a cup of coffee. I got a slice of toast with Vegemite on it, and try to understand what's going on. But let's not talk about it now. Let's go straight into Topical Thunder and dissect the situation.
Let's do it.
Well, it does keep us on the toes. So I saw the headlines coming out. You were shouting down the microphone, it's going on, and I could hear it. Ran back to my desk. And the immediate thing that I thought, Blake, was when you saw headlines coming through from the wires saying that the Trump tariffs have been blocked by the International Trade Court, was like, this is a big deal. And then obviously we go into the devil's in the detail in this situation. But NASDAQ futures are up 1.5%. We call gold coming off $20. The dollar had a little bit of a bid, but nothing too spectacular. And I thought to myself, first of all, if this was going to derail the whole tariff movement and cause a continuous pause, I would expect much bigger moves than that, because it would throw such uncertainty at a time when markets are quite illiquid. You've got that rollover time between the close of the US into Asia. We've got less liquidity, and you'd expect more exasperated moves. That wasn't the case, but we have seen some moves. And then we go into the devil's in the detail. What I'm hearing at the moment is that we've got to split it into two. The court has decided that the tariffs on the emergency executive powers that he used on tariffs were unviable. They potentially could be going on pause, whereas the orders and the tariffs that went up under things like steel and aluminum, that under 232 executive powers, they can continue. Obviously, the conjecture now is that Trump will have he'll be speaking, but he'll have a chance to override this and go through the courts as well to put his case forward. So this is above my pay grade. And I'm looking at the response from markets, which is big, but it's not huge. If we generally thought tariffs were off the table for a period of time, we would expect to see massive moves. And that hasn't been the case. So how are you making sense of this?
Well, first of all, I had some dollar shorts on, and I had to get rid of those. So that was first order of business. Second thing is you got to realize that and just happened just moments ago. I knew this was going to happen. Trump administration already put in their motion for appeals. So, and this process, I don't know how long it's going to take, Chris, but this pause is now a pause that we're going to see for the very near term. And how the markets respond over the next couple of days is going to be very interesting. And I have to assume that the backlash that the courts are going to get, the chatter you're going to get from Donald Trump himself, President Trump, also the Trump administration on what the courts are doing is going to be hot and heavy over the next couple of days. And it's going to create a lot of volatility. So we just have to proceed with caution at this point.
I think it's one of these times where the price is the only opinion that matters, right? Because I have to really do some study to what court are they going to be appealing to? How's it going to go? How long is that time frame? in that period of a pause, the US administration is obviously going to collect very little in the way of tariffs. And that's something that they really obviously need to offset future tax cuts. So we just need to understand the timeline, the probability of the courts overruling this and allowing the initial proposal to go through as expected. But obviously, the concern we've got at the moment is that Trump won't have the powers to pull off the orders that he wanted to do, and that obviously will frustrate him and Bess and the team. But right now, it doesn't feel people are acting, but until we actually understand the process, it's one where we really can't throw money around. It's why I'm looking at price and the aggregation above what I believe, which my understanding of this is very poor. So that's where we need to see the price. The price will be the reaction that we need to see, right?
I agree with that. I 100% agree. And it might be a late night for myself, and it might be a long day for you.
Hope so. Love long days. Got my
well, I was going to say, I know it's this wasn't really my topic, but we want to move on to Nvidia and talk about the Nvidia earnings that were just released, and they were blowout earnings. Jensen, he says all the right things, as you always point out. Although the last three earnings, if we've seen the Nvidia reaction, we've actually seen Nvidia trade lower, but Nvidia is a little bit higher post market. I was thinking when that news headline came out, I'm like, oh, did Nvidia say something during the press conference or during the call that I missed and maybe the market missed? But I can only imagine what Nvidia is doing post market. But Nvidia is carrying the torch right now as far as the equity markets go, and we had a nice bull flag pattern that's trying to play out that frankly targets a lot higher at this stage in the game. But I know you dig into the earnings pretty deep, Chris. So how are you seeing the earnings call from Nvidia? Because everything, all the cliff notes that I read, very positive on the outlook of AI. So
yeah.
And they go on to say that they do make gaming chips too. So.
Yeah, well, everything's going right for the company now. I mean, there have been a number of overhangs, which, obviously they've gone past. They've gone past the hyperscaler earnings. We've seen commitments of CapEx for next year. In some cases, they've actually increased it. That was a big tick. They've got the AI diffusion ruling out the way, and that's still to play out, but obviously that has infused people, and they've potentially making some of that lost revenue up in the Middle East where they're doing deals, and that's a new source of supply going forward. The Blackwell ramp is going incredibly well. That's at full production now, and obviously that's going to feed into solid earnings in the second half of the year, into the next quarter, but also into the second half of the year. So I think the earnings numbers here was really a major overhang that I want to say held people back. I don't think positioning in the stock, no, there was no shorts left. Everyone was going long into this stock. Positioning was very, very stretched on the long side. Where it wasn't was on the option side, where we'd seen quite a lot of put activity. People were looking to hedge out that long position in puts. But look, the Q1 numbers here were slightly better than expected. And that's alleviated some of the fear. There was a lot of analysts who were saying that they were going to miss the mark for the first time in a while. The gross margins were better. And this is a gross margin story. Gross margins had been trickling down because of rising competition and costs and various factors. But now they're going to see gross margins ticking back up, and we expect them to go to about 74% by the end of the year. So gross margins are on the way up. That's a huge positive for the investor base. They love that. And, they're guiding to slightly higher beats in Q2 sales as well. And that incorporates the write-offs that they've had for what they've had with the chips to China as well, where they wrote off about $8 billion. So, gross margins in the right space, sales ticking up nicely. They're talking about the Blackwell ramp being great. The demand for the AI infrastructure is incredibly strong, quote unquote. And obviously they've got the hyperscales there. So this is a business which is going to see a strong second half. They're producing cash left, right, and centre. The market liked the story. The implied volatility or the implied move in the stock was about 7%. So we'll see if that happens. I mean, we're up 4.5% in the after hours, but I think it's a great story. I do take your point that this stock does have a tendency to roll over post earnings. So there is you could see a sell the fact. But I think, if you are looking for leadership in this market, I think Nvidia it's been showing you for a while that it's up 60 odd % from those lows. But with a move after here, and we're 8% from the all-time highs. I think this is where the leadership goes. It's a great company. It's doing everything right, and it's the overhangs are moved from the stock. So looks pretty good. I like it. I buy pullbacks. It goes higher.
All right.
Anyway, let's go into US dollar moves because, yeah, sort of going a bit of a swerve from the questions. But one of the talking points, we have seen a bit of a rebound last few days in the US dollar. Dollar index is pushing 100 again, a little bit of buying in dollar yen. But yeah, one thing we have seen, Blake, and we probably won't touch it too much now, is that there had been an element of carry positions going forward. Volatility on a cross-asset basis was sort of low 20 percentile of the 12-month range. The VIX below 20%, and people wanted to be paid. So we went into LATAM FX. The Brazilian real was doing well. MEX, Colombian peso were the flavors du jour, and people were using it as a funding, the US dollar as a funding currency. But people are saying, there is a switch out of US assets, not people actually selling US assets. People weren't necessarily selling treasuries. People weren't necessarily selling equity. But what they wanted to do was neutralise that US dollar exposure, lift hedging ratios, because there was a perception that the US dollar was on a multi-year structural decline, led by carry, but also led by some of these Asian countries as well, where we've seen big gains in Taiwan, Korea. And there was a view that the purchasing power parity, which had the dollar 30% overvalued, the US dollar is going to come down to that sort of fair value. And also all roads then suggested that over time, we're going to see a multi-year bear market in the US dollar. I'm sympathetic to that view. Trading, it's going to be a very different situation. But where do you stand on that view that potentially we could be in a multi-year structural decline in the US dollar?
Well, my answer would have been different 30 minutes ago. I'm just kidding, as I'm not that fickle. But we are seeing a nice recovery in the dollar following this news. I think overall, structurally, you are going to see a diversification away from the dollar. I think that's a real thing. Now, that doesn't mean the dollar is going to go down today, and we could have actually several weeks of a continued recovery in the dollar based on what's happening with this with the tariffs and what's happening with President Trump. But overall, I think that this erratic behavior of the dollar, this erratic behavior of the Trump administration is going to entice people to deleverage away from the dollar to a certain extent. So, whether the dollar index is right above, well, at this moment in time, it's right above 100. Whether we recover back to 102 or we go straight back to 98, I think on any type of meaningful recovery, you're going to find willing sellers, especially over the next 3.5 years. So finding levels to be short the dollar is what I'm going to be doing, but that doesn't mean that I'm going to be doing it right now. Matter of fact, I happen to be long dollars at the time of recording as we're doing this.
The market has shown from the initial reaction that if this stays in place, that it's a US dollar positive. They've shown the initial reaction is usually the right reaction, or it is the right reaction, is what the market's telling you. The market's telling you that tariffs on pause, is dollar positive. But could there be a world where this actually then becomes dollar negative because you've got a government that can't do what it wants to do and achieve politics, and people say, well, that's not great. I know. They're probably, I don't know, I'm just saying that probably seems to me on first blush that he'll get his way and that they'll find a way to get this passed and go back to full tariffs. And I think the market probably suggests that's going to be the case. But this idea that Trump's gone out with a really messy policy and he's made up policy on the fly, it seems, and then the courts are blocking it. I mean, how does that seem from an international perspective to want to hold US dollars?
Again, that's I reiterate. I think on any type of dollar rally that's meaningful, you're going to see sellers into it because who wants to hold a butt ton of dollars? I did say butt ton, Chris. I did. Yeah,
I think it's really interesting as well because I think people look. Tina's still very much there in the house, right? There is no alternative to treasuries. There's no alternative to US equities in some regard. People do have choice, but people still want US equity. That's not going away. People know that the US Treasury market's 5 times more liquid than other markets, so that's not going to go away. But I think the new conjecture here is that you can buy these markets, but you're just lifting hedging ratios. You don't want to hold that US dollar exposure for holding those US assets, so you neutralize some of that. And I think there's so much of that could be a big issue. So I think we stay positive on US assets more broadly, but it's the US dollar side of exposures that I think a big concern right now.
Yeah, I think you're right. Well, Chris, I want to talk about U.S. politics a little bit, and like I said, knowing this is an Australian / Asian maybe not so much a U.S. show. I want to talk a little bit about politics. I want to talk about the TACOtrade. And the TACOtrade, this acronym got a lot of headlines. I don't know if you saw the press conference where TACO stands for, the acronym stands for Trump always chickens out. And, the thing is the market has been reacting to the Trump administration backing down from putting up tariffs so high. The thing about this particular acronym, I think it is important because it's important that you understand Donald Trump, the Trump administration, and how I've been watching this guy for my entire career, ever since he was not a politician, but just a New York business, retail or a real estate business mogul, if you will. I've seen him, the way he acts, the way he reacts. I mean, I've been watching him pretty carefully over the last almost 30 years, as a lot of you have as well. One thing that I do know for sure is he doesn't like to be put down. He doesn't like people making fun of his small hands. He doesn't like, he always looks up to, a certain type of figureheads. You can call them dictators or whatever. But his personality type, I think, is very reactive. And therefore, this comment really upset him. And now you have the courts that are trying to block the Trump tariffs, the Liberation Day tariffs. I have a feeling he's going to come in hot and heavy. And he is a person, like him or loathe him, he brings a lot of volatility to the market. But he is a person that's going to bring a big wake with him, behind him. And so I have a feeling that he's going to be doing something crazy to stop and make sure that people don't use that acronym anymore and calling it the TACOtrade, and he's going to start doing some crazy stuff, even at the expense of the global economy and the U.S. economy for that matter. So what do you think about this whole TACOtrade and how do we respond to it? And I guess my suggestion to you guys is that we have to proceed very, very carefully in the months ahead.
Well, it depends if he's going to have tariffs to push back on now, but we've all noticed it. All the nations who are doing deals with him must have known that as well. But I think we've gone past tariff uncertainty, so it's not the end of the world. But it's pretty obvious. He goes in hard. He goes in with a ridiculous opening gambit, and then he pulls it back in every single time, and that's the art of the deal and the art of the game. One thing I will say about Trump, love him or loathe him, you've never seen a Republican leader be able to do what he does in Congress, in certainly in the House, being able to pass that big, beautiful bill through the House as seamlessly as he did and corral the troop with Mike Johnson as well. There's a lot of contentious points in there, and it went through absolutely seamlessly with a 3-seat majority, a slim majority through the House. Obviously, it now needs to go through the Senate, but there hasn't been a Republican leader in the US's small history since we gave it back to you. Sorry. That has been able to do what he does. And, he can corral the troops, unite the factions of the party to go and push this through. And that's going to be very positive for when we go through the debt ceiling debate, because that's going to come through in mid-July. They've got to get through a $4 trillion, and they can't rely on any Democrats to do that because their list of demands is ridiculous. So he's going to have to get every single Republican vote to get through a debt ceiling of $4 trillion. And that's not going to be hard. But if there's any man who's going to do it, it's Donald Trump. He's the only person who can do this right now. So going back to your point, he's going to be, you'd love to be a fly on the wall in the White House at the moment because he's going to be smashing the place to bits. But I don't know whether he's going to be able to ban the word Taco Tuesday. But obviously it's not the sort of thing that he wants attached to his name anytime soon.
No. and the backlash is, I think it's, like I said, it's going to be at the expense of, we're going to be in the wake of it. So
I think those judges are probably going to, I think those judges will be called treason, but they probably won't have much of a bright future. He'll find a way. He always does in that situation. Anyway, let's move on from being political. Let's go into the topic. Let's go into the charts that matter. Right, NASDAQ 100, because now since we brought the chart up, the actual I wanted to argue that we were going to see an upside break, as you can see there, set to break through, and we have seen that now. I didn't obviously know that these headlines were going to come through. It has obviously favoured the position, and now we're a smidgen from the all-time highs. Now the thesis I was running is that obviously Nvidia is such a large component of the NASDAQ. It's obviously got the biggest weighting of this market cap weighted index. We're pushing up the highs. We've now broken through. If anyone wants to pull up a daily chart at this point in time, you'd see it breaking through, and we're not a smidgen from those all-time highs. So I feel like pullbacks are buying opportunities. Now we've got Broadcom coming out of numbers next week. Now Broadcom are slightly different from Nvidia. They work more on the inference side, on the custom ASICs chips rather than on GPUs. But they are the second biggest AI player in the world, really, and certainly in the US. So that's one that we will be watching when they come out of earnings next week. But yeah, certainly the AI scene has found its mojo. What I want to see as well is whilst we are risk of a bit of a rollover in Nvidia, because it's very well over-owned, is that the options market's going to play a bigger role now. Just forget about the fundamentals. When people start chasing, they start buying out the money calls. The market makers, the dealers, have to go and hedge that position. They bring their deltas back in line to zero by buying the underlying. And if I look at the options chain at the moment, you can see big buying of strikes around 140 and 145 in the 30th of August market. That's important to me because that's where the momentum in these high growth, high beta stocks comes in through the options market. The active guys are chasing this. And it's the dealers who have to go and hedge that exposure. So really, for me, it's not necessarily about the past form guide. This is a company that I think people will start falling in love with. It is a market darling again. The actives are all over this. And whether or not now we can see those momentum type shifts as people chase this stock higher, that will bring the NASDAQ to all-time highs.
All right, Chris. Well, NASDAQ 100, you didn't know it was going to break out, but apparently you broke out your palm reader earlier today. All right. Well, my first setup is going to be sterling, and this one's going to be an interesting one just because of the news that we just got. The pound, I wanted to ask if it's breaking out or if it's not. And this is one of those that could end up being a false breakout. I was looking for a move down to the 38% retracement, which was 134.20 something 22. Let me make sure I got that number correct. But we ended up getting just slightly past it, which is a 38% retracement. I'm sorry, it was 134.16. We went as low as just moments ago 134.14. So we're at the 38% retracement. This could either be a breakout where the dollar continues to lose strength and we see this massive breakout, or it reverses and we get a false breakout. It's one that's going to be on my radar, Chris, in the days ahead. I actually was long up until that headline came out, and I got out of my long. But this is still on my radar. It's a setup. It's either going to be a continuation from here, or it's a false breakout. We're going to see a nice pullback. So that is that's my first setup is sterling. Is it a breakout
good one.
or not?
So make or break time. Again, we always talk about it, but failed breaks can be the most powerful types of market reversals that we look to see. So one for the radar, good one. Let's bring up the Aussie dollar, because this one has been an interesting one from a fundamental perspective, because what we like about we have seen the interest rate market becoming quite bearish now for the Aussie dollar, but it hasn't really reacted too much to interest rates. Certainly this pair, the Aussie against the US, doesn't really move too much with interest rate differentials. It's more sort of a play on risk in the market. And also US dollar flows more broadly about the wanting to hold those dollars and the confidence to hold those US dollars. But look, this has been a really nice range trade, and that's sometimes the market environment. I'm not someone who sticks to one market and trades the conditions. I'm more about my strategy and what markets come to that strategy. But for people out there who love trading ranges or want to trade the Aussie dollar and when I want a strategy to apply, this one right now is a very well defined range that we've been seeing 65.50 up down to 63.50. So that's where we're looking, and people are selling into the top end and buying into the low end. Obviously, the longer this goes on for, and this is what I'm bringing up at a setup, the longer this range, this contraction, this consolidation goes on for, the more powerful the break and the potential trend in that direction that goes forward. So one for the radar. I know a lot of people like to trade this pair. It's probably, in terms of the open interest of our client positions, it's probably in the top 5 at the moment. So people do love trading it. But this is a big range trade at the moment, and a breakout will be very, very powerful and well traded, I believe.
Awesome, Chris. All right, so my final setup, Chris, is going to be Ethereum, and the Ethereum market. I want to assume that we're going to play a little bit of catch up with Bitcoin, but we really have to break this 50% retracement. We really got to break this 200 DMA. You can actually see how we're just nudged right up against that 2740 level. And so my opinion is if we break above 2750, it's going to be a pretty big bullish breakout. We're probably going to be tackling 3000 again. The flip side is the longer it can't break out to the upside, the more risk it becomes. So I'm going to be looking for a big pivot right here around that 200 DMA, a break above it, clearing of 2750. That's a bullish breakout, but if it can't break out, it could roll over. So, and that probably has more to depending more on risk appetite with the market, which obviously we're all over the course of the next couple of days, we're going to be sitting on a knife edge waiting to see what happens with risk. But I think it is very pivotal at this area in the Ethereum market.
Yeah, good stuff. Now, I like that. I guess that I'd say there's a 60% probability it goes higher and breaks to the top side, and a 40% it goes down. So I like it higher. I'd like to have done the gold chart as well, because we're seeing a few outflows of gold this morning on these headlines. People they're seeing less risk, and that would have been a good one to do as well. But mum for another time. Anyway, we can post that in the comments section below for people a bit later on. Anyway, let's go to play of the day. Again, I came up with this idea before the announcement, and I think it's something I'll stick with, and that's being rather than necessarily go long the NASDAQ, which I like and I think it performs, but I just go back to my long short strategies, because I think the one way we can play this right now is looking for outperformance. It's just one of the many strategies that I'm running. Just momentum main version, and also the tactical ones. And in the tactical ones, we do a lot of long short strategies coming through, and that's a low beta strategy. You don't make as much money, or you don't lose as much money. Rather than just one directional trades, one delta trade, if you want to call it one. But I think the NASDAQ looks like the strongest market now, and I want to play the outperformance. You can do that against the Dow, long NASDAQ, short Dow, US 30. But the Hang Seng is looking a bit weak at the moment. We are seeing, if you look at the daily chart of the Hang Seng, you can see that testing sort of mid-May pivot lows. I think we'll probably get a breakdown to the downside there. And with the acceleration that we're seeing in the NASDAQ, one, because of Nvidia, but also, the whole AI scene is getting some love now. And the idea that, we're going to see that continue to outperform, people chasing through the option side of things, I think you're going to see that NASDAQ, working quite nicely against the Hang Seng and outperforming. So I like this long short. And the good thing about these two markets as well is, whilst they are priced in different currencies, we know that the Hong Kong dollar does have a peg against the US dollar, so you don't really get too much in the way of currency fluctuations. And they trade at a similar volatility and a similar beta as well, which means you don't necessarily have to really go out and adjust the long short legs on that situation. So I think this is working. It's already moving higher, and I think it continues to do so. So I'm long the NASDAQ, short the Hang Seng.
Woo, man. Okay. Thanks, Chris. My play of the day, even though I took this chart just before these headlines and the court ruling came, I still like the Kiwi here. This is what we call a bullish wedge. And even though I was actually long the Kiwi, got out for basically break even after the headline, but it's still on my radar, and it's still a potential for me to play on the long side. As long as we stay above 59 cents, I think it holds that wedge. And I'm looking to trade a breakout above 60.40 or that 618 retracement. You can see that red horizontal line. I want to be adding above there. So I want to buy as close to that support, that lower trend line, that blue lower trend line. Like I said, it's near 59 cents, 59.10 or so. But this is all due to the RBNZ. They did cut rates yesterday. They did, but the market has to reprice them not cutting anymore through the remainder of 2025. Now, whether they do or don't from here on out, the market still has to reprice it. So I think that's going to be a Kiwi tailwind moving forward. And I still ultimately want to be short dollars. So, long New Zealand dollar, close to that. I like that, mate.
And it reminds me of one of your old favorite songs, Boys to Men, End of the Road. And we're getting to the to the tail end of, I like to play that policy divergence. The Kiwis, the central bank there has obviously been very aggressive pretty aggressive in cutting rates. They've certainly started, and if you look at that relative to the RBA, where they're really just starting to get going. We've had 2 rate cuts so far. We're expecting there's about 70% chance they go again in July. We've got 3 rate cuts going through this year. So you've got this idea now, which is maybe I want to ask you quickly before I've got the mic. Is it priced now? Do we sell Aussie Kiwi because you've got one central bank which has done the heavy lifting and we're getting right to the end of it, and the other one's still in the meat and have been a slow moving ship? So is there more tactical juice to the downside of Aussie Kiwi, or is it all priced?
I think there is, but the data short it was last night. I know we were talking about it in our community of being short. Soon as the RBNZ decision came out, we started to read the headlines. I'm like, this is an Aussie Kiwi short. That was yesterday. But I still think I think there's more juice to it. So I would sell any rally that you see now.
Good stuff. Juicy. Anyway, Blake, thank you very much for coming on. Some great thoughts there. And thanks everyone for being at home and sharing this journey as breaking news comes through. I hope you captured the moves and you managed to stay on the right side of that situation. But let me hear your comments about how you're seeing the markets, how you're seeing the situation, whether you think it's a big deal or whether it's just the Trump's appeal, which is yet to come or which will come, will be overruled and the tariffs will go through as normal. It's been an interesting situation. What a world we live in. Anyway, see you back next week for more of the trade-off.